record. Yes, I believe the first recording should have been. Somebody said I was about to jump on the charts. Okay, cool. All right. So let me pull it back up. All right. Let me pull it back up. Let's see what was going on. Um, yeah, not sure how we're gonna be able to put those two videos together. Let's I might gotta make a part one and part two video. So this is officially, guys, part two. We got knocked off of part one. So, all right, let's go. Let's go. Let's go. Let us get back on to this. All right, you should be able to see my screen. You're about to explain everything in chart. Okay, cool. Thanks. Yeah, I was just like, what is happening? It was legit lost at what was going on. And let me share my screen. All right, can you guys see my screen? What can you see on my screen? Can you see like getting view and so forth? Okay, all right, cool. All right, so let's get about the flow. What are we talking about? All right, just bringing it all together, basically. All right. All right, so three things that we mentioned. All right, let's get back into it here real quick. All right, all right, we can use this as an example. All right. All right. So yeah, so we're identifying order blocks, right? We're identifying the order blocks. All right. So first and foremost, first thing that we want to see is we want to be able to identify the engulfing candle. All right. That's what we were talking about. All right. Okay, good. We want to be able to identify the engulfing candle. For example, this particular one right here, boom, we can see the momentum. We see that engulfing candle market pushed up. Fine. All right. Then we have second, we can see also the liquidity. Just shift this. We can see the liquidity being flat. All right. Market push below. Take out the previous candle right here. All right. See a little noise in the background, right? And then we also could see the imbalance being created right here, right? We can see the imbalance created. So we see the wick here, we see the wick right here. So for example, clear, imbalance, bam, all right? Market was imbalanced right here, all right? We see how the market created that imbalance, right? No, like I mentioned, right? We're looking for is two things. One, you got the impulse, you got the correction, then you get the continuation, right? Now, as it relates to the market pulling back and for you to get an entry, remember I said there's two ways you can enter the market. One, you can enter the market from order blocks. Two, we can also enter the market from imbalance, right? How do you know? Sometimes you don't. All right. But I always target the art of blocks. Why? Because the risk to reward is much better, right? But in this scenario, you can see how price, for example, I'm gonna use the same colors that we were using before so that everything makes sense. We have here and here, we see the imbalance that was created, right? We were using that as red, okay? Right? We were saying this is the imbalance here. Boom, imbalance. Right? So everything looks familiar. Right? And this would be our order block. Okay. Right. So we see how price pushed up, pulled back, right, into the imbalance, and then we got the market, continued onward, right? No, in this scenario right here, right, we also have basically like the same thing took place, whereas we have price pushed down below this low, the engulfing candle popped up right here. we left imbalance behind, right? Like if we take it back, for example, if we were at this point, we will see that the market was imbalanced here, right? So we have this candle, this wick to wick, boom, imbalance created, right? Then the next candle went ahead. Okay, so next candle went ahead, traded into our order block, and then continued to push up, right? So see like that, buying, and then we continue to push up, right? Now, there's one other thing that I actually didn't mention, I want to mention. I don't really want to tell you the two together, but you definitely have to tell you the two together. What strengthens or the block or the imbalance as well is when you also have a break of structure. Okay. So, for example, where you see price like trade above previous highs, all right, that is an even stronger indication for you. Why? Because one, it strengthens your demand zone, which in turn strengthens your order block, which in turn strengthens your imbalance area, right? Which in turn just strengthens, the whole point of price continuing in that particular direction, right? You want to see price break structure as well. So add that to your notes, right? You want to see price break structure as well. That's also another great confirmation for you, when you are entering the markets, right? So it helps significantly, as you can see here, right? Where we got the engulfing candle price actually traded above a previous high point, and then the market pull back into your imbalance, and then we see how price continue to go up. Once again, here we got price pushed up, right? Traded above a previous high here, right? Then we pull back, right, into the order block, into the imbalance, and then the market continue to push up. Let me know if you guys are seeing this. Let me know if that's making sense. I'm gonna give you, of course, more examples of it, right? So you can see how this plays out. And again, it happens on, many different time frames. I'm gonna show you on multiple different time frames. I like to enter the market though on 15-minute and down. So 15-minute, 5-minute, 1-minute time frame. Those are the time frames that I enter the market on. One, like I always mention, you always hear me say this, to increase reward and reduce risk. Okay? Increase reward and reduce my risk. All right. And as you could tell, why I more so target the order block. All right. Let me show you from this perspective as well. You have, let's say, if you enter on from an imbalance area, this is your entry. This becomes your risk. Okay, so like below, that area here is where you will put your stop loss. Your stop loss becomes like 67 pips at that point. Okay, and you target the highs as a reward. You see here, that's like a 1-to-1 ratio. Okay, so that you risk 67 pips to gain 79 pips, all right, as your risk to reward. If you get price on your order block, and preferably I'm gonna give you some more like information as it relates to that. But let's say you get price on the opening here of this order block, your risk immediately drops to 35 pips, and that trade increases to a 1-to-3 risk to reward. All right. And typically, when I enter trades, I'm more so entering, like 50% of that order block. So once again, my risk drops again, just about 23 pips, to a reward is now in turn a thousand and 124 pips. So now that trade turns into a 1-to-5 risk to reward. So sometimes it's the fact, sometimes you can miss some trades because of a better risk to reward. All right. But sometimes, it ain't that worth it, going after trades that you just get in return what you actually risk. All right. So, sometimes I don't mind. right? And that's also why I have different entry models in the market, right? As we will get to them so that you can also employ them, at different points in the market. Yeah. But I just want you to grab and get this one, all right? Because it's simple. You'll see it over and over again. This is how the market moves, right? In different, you see this scenario basically taking place over and over again. Okay. So, another example, right? Let's use this perfect example right here, right? We use it from the sell perspective, all right? I'll show you this from the sell perspective, right here. Okay. So, number one, all right? Let me ask you, all right? Y'all tell me. Number one, do we have an engulfing candle? Yes. Okay, perfect. So you see here, bam, got that engulfing candle, all right? Great. Number two, the price create imbalance. Yeah, absolutely. Right. Because see the imbalance, we just had sales in the market. We got that imbalance, boom, right? Like the imbalance was created. You can see literally from here to here, boom, imbalance in the market. Right. Number three, did we get a liquidity grab? Did we get a liquidity grab? Yeah, perfect, right? You see price trade above these last set of candles right here, right? Pushed up, right? And then pushed down, right? We get a liquidity grab. And then number four, did you get a break of structure? Right? We can add that to it. Did you get a break of structure? Absolutely yes, right? Because these were previous right here. These are previous lows in the market, all right? And we see price traded through those lows, all right? To create some lower lows. It should be at these points here, right? Create some lower lows. And then we got price traded right back up, boom, into that order block, right? So you see it playing out like perfectly here. Like this is one of those trades you go straight to the bank with, right? You go straight to the bank with these type of trades, right? So then you'll be able to set up now in a manner where, right? So let me just show you, we got your imbalance. You see all this area here that is imbalanced. Okay. All right. It's imbalanced. So this is your opening of your order block. This is about 50% here of that order block. All right. And you see here, for example, bang, you got a risk in just above. Yeah. And then your reward looks like you could, again, first target could always be the lows. All right. And you would get a trade setup basically looking like this. Pretty simple setup. All right. And you'll see once again how the market is going to pan out. It always plays out like this. Like it always happens in a manner like this. Not perfectly every time, right? But you will see it over and over and over and over and over again. All right. Again, let me show you over here, for example. One, let me ask you once again, did you get engulfing candle? Talk to me. Yep. You got an engulfing candle right here. Boom. Did we create imbalance? I said no. Once you see it, you can't unsee it. Yeah, you get imbalance. Great. All right. So the imbalance that was created, boom, you can see here, imbalance. Yeah. See the imbalance. Okay. Boom. Did we get all right, hold on. All right, no, Grace, that's what we're gonna get into. That's another session because that we're going deeper now, right? We're gonna get there, right? But did we get the what's that thing? Next thing, the liquidity grab. Did we get that liquidity grab? Absolutely perfect. Boom, we got price pushed down, clear below that last sell candle. Phenomenal. All right. So order block here. All right. And all right, order block there, boom, imbalance here. All right. And then we had scenario like this. Did we break above? Did we get a break of structure? Let me know. We get a break of structure. Yep. All right. So right here, this was your high. All right. Boom. Price broke structure at this point. All right. Pushed up above. Then we got, so this was the move. Then we got price straight back into the imbalance right here and then continue up. All right. So your trade setup again could look like this. All right. I mean, typically, I preferably would have gone for the harder block, right? But in the last didn't stop by at all, and we could target previous heights. Okay, pretty decent setup. Still get like a 1 to 2 on that. All right, 27 pip stop, boom, 65 pip reward, small. All right. The breakout structure is the close of a bullish candle. Yes. I would say the break, the close. So it's two things. All right, it's two things. Because you could obviously that's gonna look different based on the time frame that you're on. So what you want to see is a candle closing above an area, like giving you at least a few pips above an area. All right. Like you don't want to see a wick or just a wick um above an area on a lower time frame. I would say at least like a 5 minute break or 15 minute break, and you good to go. All right. But if you got things like just wicks in and out of in and above out. If you got a wick above a high and it just trades like strong back into that area, then you can definitely disregard that quote unquote break. All right. That's to be able to look at it. The higher the time frame, of course, is going to be candles. All right, that's going to be candles. So that's why I can't just tell you, well, yeah, because it depends on the structure, the time frame that you're actually trading on. Okay, on a 15 minute, then you might see me. Let me make sure. Let's see if we can find out this area. All right. So, for example, 5 minute, you got price push up, close a few pips above here on that candle. Right. We see the railbird came up here. So, right. Their price really pushed up above. Yeah. Give you a strong wick back down into this area. Right. Yeah. And then, trade it off of this. All right. You can take that particular setup. No. What was I gonna share with you guys from a sell perspective? All right, okay, so now we get into people want to know if I just enter the trades, if I set limits. Listen, that's another session. We can't go into that now because here's what I'll say. The aggressive entry is a limit. All right. That is the aggressive entry. All right. The aggressive entry is a limit. A cell is like this. This is the first one we went through cell. All right. So that's what a cell would look like. All right. Let me show you different setups. Like these ones were slightly different entry models. Okay, this is basically the same type of setup here where again price push down. All right, let me show you here. Like as I showed you guys, like 5 minute, 15 minute. I would say if you're now doing this, start on a 15-minute time frame. It's a higher confirmation for sure. So let me go back there for you guys. It's a higher time frame confirmation, and you won't get caught up in things that um on a smaller time frame, which may not necessarily be like confirmed. Okay. Start on a 50-minute time frame, and as time progresses, I'm gonna bring you guys down to like 5 and 1 minute entries and so forth, how I enter the market on those time frames. All right. Let's start on 15. And again, we do the same thing. So number one, all right, just clear some stuff. Number one, here, did you get engulfing candle? Right? This is like in a scenario where you miss this. So this is ultimately where you will want to enter this trade, right? But number one, did you get engulfing candle? Yeah, okay, cool. Number two, did it create imbalance? Okay, perfect. So you see the imbalance here created. All right, so we got from here to here, we can see imbalance created. Okay. Number three, did price sweep liquidity. Did we get our liquidity sweep? Okay, cool. All right, y'all already paying attention for real. All right, we got price definitely swept some liquidity. All right, like right here. All right, we have market push down, boom, swept some liquidity right here, dropped again, push up. Kind of right here at this point, not really. Let me trade it slightly by above it. I'll give it. All right, and then we get a break of structure. That's the next thing. Did we get a break of structure? Yeah, absolutely. So this was the low, right? So it first came down, boom, that was your low. Market traded up, boom, came down, broke the structure right here. Then we traded back into the imbalance, all right? Traded back into the imbalance, and then boom, we went again, all right? Market pushed down again, all right? So two things I really, really want to point out to you guys, and I want you to don't like not that I don't want you to don't get caught up in order blocks and so forth, like, but I want you to really remember structure the market. All right, as you will see, and that's why you see me draw these lines on the market all the time. Every session I come in, I do the same thing all the time. Whereas you are literally, right? Literally, you are looking for impulse, corrections, continuations. Impulse, right? Impulse, corrections, continuations. Impulse, corrections, continuations, right? Impulse, corrections, right? Continuations. Like you do this, I am telling you, it is number one, the way that the market moves. Okay, it's the way the market moves. Like you can't dispute that fact. All right, there's no if, mights, buts, or maybes. All I'm going into now is like when do you actually enter the market on that correction or on that pullback? Like when should you actually enter? Right, that's literally all we're looking at. And if you look at this, I can highly bet you guys that this right here, this area where you see price blade from, was an order block. It created imbalance, right? It probably broke structure and it also swept some type of liquidity. So that when price traded back into this is why we got this occurring right here, right? So let me talk too fast. Okay, perfect. Let's see. Look, number one, talk to me. Did we create imbalance? Create imbalance. Do we have an engulfing candle? Do we sweep liquidity? Did we break structure? Well, voila, like magic, right? So, boom, we got all of those things here, right? These were previous highs, market boom, trade above it. We got sweep liquidity, boom, engulfing candle, boom, imbalance created, right? Imbalance created, market traded right away back down into that area. Voila, like magic. Boom, we're going again. All right, we're going again. This was a slightly different type of entry right here. All right, that was much, it was a little different type of entry. We're going to get into that differently, right? But similar principles apply. Yeah, similar principles apply. Whereas we had like a lower time frame break of structure, right? Market pull back, right? We will get deeper into this another time. Market pull back, boom, entries gone, right? Same thing will always apply. You will always see impulse, correction, continuation. But what you always want to remember, this is what we'll always emphasize to you guys, is always couple this with structure. All right. Like structure has to play a role. Right. I might just buying and selling because they see engulfing candles and order blocks. Absolutely not. You want to look at the structure of the market first, right? Because what you could do is run yourself in a problem where you're buying unnecessarily or selling unnecessarily because you see an engulfing candle. No. All right. Make sure that you identify these, on a time frame that makes sense, right? Because you don't want to be here, for example, right, on a 1 minute time frame, right? You don't want to be on a 1 minute time frame, and every time you see a engulfing candle, like you buy or sell. Yeah. Like you don't want to do that. Okay. If you couple it with structure, like every area that my eyes are looking is looking at structure. Right. So I'm trying to look at something that is not structure in the market to tell you what I mean. All right. Everything that I see, like when you start to see it, you can't unsee it. Okay. Like when you start to see it, you can't not see it in the market. So it's kind of difficult to see the wrong. Let me see the wrong thing right now. All right, I'm trying to see the wrong things. Oh Lord. Yeah, it's seeing everything that let me see, let me see, let me see, let me see, let me see. 1 minute, 1 minute. Like trade so much on the 1 minute time frame right now, like just for entries. All right, cool. Good example. So let me show you what I mean. Let me see if I find it back. Where is it? Here. Okay, good. All right. So just because you just got, like I said, like those impulse continuations, etc., like you don't want to just be entering, like on those like 1 minute time frame and so forth. So let me know, for example, in a scenario like this, market is bullish, all right? But you're sitting on a 1 minute time frame. So you know what's happening? Your mind is seeing, boom, impulse. Boom. It's saying that you brought structure, right? So now you're saying that when price gets back up to here, because this is an engulfing candle, it created imbalance. What's going to happen is that you're going to say, okay, sell. Absolutely not, right? Because in this scenario, yes, right? Look at this. Yes, you swept liquidity. Yes, you had engulfing candles. Yes, you had imbalance. Are you going to sell when price comes back up here? No. Why are you selling? It is not the structure of the market. This is not a break of structure. You are on a 1 minute time frame. All right. So it's important, right? That's why it's important to always look at the structure of the market. Because look at how different this looks now. Now, even for example, you just being on a 5 minute time frame, right? Remember what I just showed you, right? On a 5 minute time frame now, what is this? Engulfing candle to the buy side, right? Imbalance created. Imbalance created, right? Liquidity swept or the block. Price pushed up, brought structure, right? Brought some structure, market pushed up. Boom. So when we turn back into this area, only thing that we're looking to do is buy. Why are you looking to sell? Because you're on a 1 minute time frame. All right. So I hope that helped in terms of putting it into perspective of, like not buying and selling like on any time frame and so forth and disregarding structure. You have to use structure in any and every scenario. You can't, don't separate the two. Okay? Don't separate the two. I'm making sense? Everybody clear? Everybody following? All right. Everybody clear? Everybody following? What we will do, all right, in that section on Thursday, I can't do that Thursday. Thursday we got everybody together, right? Or we might, we make it interesting for some of the beginners, right? What we may do is, yeah, not Thursday. We'll do this Monday again. All right, Monday. All right, we're gonna be back Monday where the class is separated. Yeah, Monday. All right, we're gonna do Monday, whereas now we would just go deeper into the entry, right? just help you guys, like just understand further. But start to see this, start to use it, start to, you know, just get accustomed seeing it in the market. Again, it's just going to help you significantly. Like it's going to stop you from entering unnecessarily, right? Um, and like I said, like you can and you may miss some entries sometimes, right? But it's the trades that you get is going to be a much higher reward for you, right? It's just going to make a lot more sense, all right? Uh, right, the stops, please. What do you mean? What do you mean? Right, the steps. Yeah, you see, so always remember this too, right? And they're gonna reemphasize this. Remember, this is no trading strategy that I'm teaching you guys. Okay? I hate that term. Right? I just teach you this is just the principles, right? It's always, yeah, I get you, right? I just making sure you guys know, right? So remember how you identify the order blocks. All right, let me just put it back here again. All right, and this is how this strengthens the order block as well. Okay, so you want to see engulfing candles. Number two, you want to see imbalance or fair value gaps. Number three, you want to see a liquidity grab. And number four, upper brace structure. All right, upper brace structure. You get those things, your order block is strong. That area is strong. All right. It's very unlikely that price is going to trade through it with those confirmations. Very unlikely. All right. I mean, it's not like I said, it's not impossible, but it's unlikely. Right? Not impossible, but it's unlikely. All right. And more often than not, you're gonna come out with a win. All right. So like I'm gonna just show you a few more before we hop off the session. All right. So like immediately look here, you see engulfing. All right. 15-minute engulfing. Boom. You see the liquidity swap here as well. All right. See liquidity grabs. You see engulfing candle. All right. Order block. Buying. All right. We will include the wick. Okay. Price trade back into it. All right. Your imbalance was up here. Price trade back into it. So up, down, gone. All right. The growth structure. All right. This was previous highs here. Sell price, continue to trade up here. This, once again, engulfing candle, liquidity swap, imbalance, price traded up, trade back down into the imbalance. Okay. Then it come all the way back down to your order block, but traded down into the imbalance, then pushed up again. All right. When it pushed up here, what happened? Engulfing candle, liquidity swap, imbalance was there. Um, yeah, created imbalance. Not really. All right, no imbalance here created. All right, so we got like 3 out of 4 confirmations because price broke. No structure here. All right, still played out. All right, market here ready to trade up, pull back, go on again, up again. All right, and so on and so forth. You guys see it happening all the time. Okay, so another type here, all right? So the different type of engulfing that I would share with you guys here, engulfing candle, price sweat, liquidity, all right? Boom, got that wick, engulfing, boom, some imbalance right here, right? From this candle to that candle. Then the market traded back down into it. We broke some structure here, all right? Where price traded above these points, same more so this area that created the low. All right. So we got price support structure, boom, bang, gone. All right. So sell perspective, once again, price grab liquidity above here. Let me zoom in. So I don't know if you guys seeing this. Price grab liquidity above here. Engulfing candle, imbalance as well. All right, so imbalance, engulfing candle. So we call out our order block. Boom. Did we break structure? Yes, we did. Price flow structure. Boom, traded below. Fine. All right. So down, back up, and then you sell. All right. So can you not? Can you unsee it now at this point? All right. So this is literally all I be, well, not all, but this is a lot of my trade setups when I'm in the market. All right. It's a lot of my trade setups when I'm in the market. All right. So hope that helped. Um, yeah, I really hope that helped. Man, my chart is a mess. All right. So let's see. So for where can I find this recording? So I actually put it on my YouTube, all right? I don't have it listed though, all right? So I'll have to send you the actual link. All right, I don't have it listed on my YouTube, but all of them are there. I don't think you'll be able to see it unless let me see here real quick. Yeah, I'm gonna send you guys the yeah, I'm gonna send you the I'm gonna send you the recording. It's usually on YouTube, but I don't have it listed on my YouTube. All right. I don't have it public. All right. So it's for y'all. Yeah. But yeah. So real quick, what my expectations on gold, right? My expectation on gold is, well, I am looking for gold to get down to like 2,600, 26, 25, 75 area. All right, hold on. Let me get all this off. All right, so you guys got, all right. Let's get all this off the screen. I'm just give you guys a quick something on gold. Something you could probably look out for. And we just look at like a lot of lines and stuff from session. All right. But let me know, like, you guys are value, like, that made sense. Was that helpful? Did that help you, like, with what you're looking at in the market and so forth? All right. Remember, it's just, like I mentioned, just impulse continuations, corrections. All right. Utilize the order block and balance for entries. Like, literally, when I say trading can be simple, yeah, it can really be that simple. All right. To be quite honest. All right, like I literally just told you like what to look for. Like if you're really listening to what he's saying, I literally just told you like that's what you could look for in the market. Breaks the structure, imbalance, order blocks. All right, liquidity grab, engulfing candles. All right. Of course, you couple that with like things like supply and demand that we went through, and sheesh, like that's legit what you will probably need in the market. All right. You don't need that much, all right? Because it's structured, all right? Where it's a structure, we're talking structure, all right? That's it. Literally, guys. Literally. All right. Let me see. The response is very helpful. Practice makes permanent. Yeah, practice some more for sure. Value, value, value. Very helpful. Thanks. Very helpful, helpful. Very good. Right. Okay, good. So glad you guys got value from it. Maybe able to wrap up this session. So like I said, like, I'm looking for goal really and truly to get down to like 25. Let me tell you here real quick. So I'm looking for gold to get down to back into these areas here, back into like 2600, that kind of price point. All right. All right. Let's go to get back down into that price point. Um, yeah, let's see how we do. All right. Actually, we could even come lower, to be quite honest. We could come lower into this area and let me see if you guys understand why. Right? We literally just went through it. Right? So back into this 25, 75. Why? Think about it. Imbalance, engulfing candle, right? Liquidity swap, order block, just saying, you know, like we can get back into that area, trade back into that area, and then trade higher, right? Because we've been bullish. Like check it, we've been, bullish for some time. I just think we're gonna sell for a little bit. And then when we reach back into this area here, that was pretty strong. We should probably push back up again. Okay. So for our time frame, I'm looking for price to come lower on gold. Let's see how we get there. I was really looking for the market to come back up. Before I got these confirmations to sell, I was really looking for the market to come back up into this area here, all right, into here. We're looking for price to come back into this area, which is like 26.55, 26.56, that kind of area before selling. All right, so I'm gonna see if this continues to be that move down. All right. So I really got some confirmations to sell at this point. So it was like, yo, we run it, see. Otherwise, let's wait and see. Markets no just consolidating. All right. So I ain't definitely not doing anything at this point. Just let price do what it does. We're gonna wait. Any other entries that I would put, like if I get the confirmations and so forth, will be back here again. Market pushed up, liquidity, imbalance, part of block. All right, like literally, you guys know what it is I'm looking for when I'm trading at this point. Right? So we'll be looking for price to come back up into this area. And when it gets here, because we could be like either or, because ultimately you're looking for market to come higher. We will see if we will take this entry. So because price may trade back into it, it doesn't mean I'm just gonna run with the entry, right? So I'm just wait, see how price like reacts in the area, and then it's something that we could potentially run all the way down, like I mentioned, right down into like 25, 75 type area, all right? And then I'll be looking for setups, like take us for buys and so forth, all right? So, with that being said, guys, I hope that this session was of significant value to you. I really want to encourage you guys really plug into these sessions, man. Like I just believe that we provide a stupid amount of value here, on these calls, and look out for when we have like live boot camps and so on. Like, imagine this in person. Right? This is it's gonna be fun, man. It's gonna be interesting. Really looking forward to meeting everybody. So just really put everything into practice, right? Start to fund up your accounts and so forth. Let's get to it, man. All right, let's get to it. Practice means permanent. All right, like someone said, practice means permanent. All right. So be blessed. Tomorrow at 9 a.m. I shall be live, I believe. Right, I'm gonna be live tomorrow. Hopefully we get some setups on a live call. If not, I'm gonna leave you with a setup. All right. If you don't see anything that I like, I'm gonna leave you with a setup so that you could take the trade. So I'll send you the first recording. So I'm gonna try and see, where it went because I believe it was. I mean, I recorded it, but I gotta see where it actually went because it just kind of, so yeah. So with that being said, have a good one. Be blessed. Peace.